It's Wednesday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Mike Bowden-Dissel back with us with a rail intermodal update. But first, we're going to go to Zechs Trippin with a carrier update brought to you by PowerFleet. Stay tuned.
Hey, and welcome to your Wednesday carrier update presented by PowerFleet. I'm Zechs Trippin. So, our tender volumes continue to go up and to the right. So we are still growing our tender volume index, still not something that typically happens this time of year until right up to the holiday when we see a surge of freight for the following week. Again, we have a little bit different setup this year where we have the holiday on the weekend, so a lot of people celebrating on July the 3rd. So not sure how that's going to play out just yet, but still the fact that we're seeing these volumes increase into the weekend. What does that mean though in terms of when is this freight going to move? When is this requested pickup date time? Tender lead time helps us measure that. If you look here on our the blue line right here, you've got our 2.69. That's tender lead time. So the real value of this is in the direction of the tender lead time. You can see as it goes up, that means that people are starting to submit their freight requests for multiple days out instead of, right now. So those single day shipment requests on the decline right now, whereas some of those longer term freight requests are starting to show up for next week. Again, as we get closer to the holiday, this thing will rise significantly. We traditionally see it rise really quickly around the holidays. You can see it right around Memorial Day right here. You see this big Devil's Tower looking thing. That's a tender lead time increasing as people are starting to submit freight orders for further out in the future. Starting to see that right now, but it's still not that high. So, we are going to see that rise significantly. A lot of these freight orders still coming through, for this week. So again, capacity is still getting tight as this volume really starts to compress things. So, volatility map. Everything listed from the largest market to the smallest market right here on this side of the chart. And you can see that the nation's largest market right now, Atlanta, Georgia, still showing a strong increase in tender rejection rates. Ontario, California, the West Coast continues to be an extremely active part of the country. We got Ontario, Los Angeles, the two of the top three largest markets in the United States right now continue to show strong increases in rejection volatility. This is statistically significant increase. It's not just, we jumped up a few percentage points today. This is outside the realm of what we consider normal activity. Even when things are going up and to the right, they're going up and to the right a lot harder than they would normally this time of year. So, and again, volumes, both in the green here on this map showing moderate increase, strong increase for Los Angeles, California. So volumes still continue to rise out of the Los Angeles market. And again, tender rejection rates almost straight down the line right here. They're all in green for the nation's largest market. So that is an indication that capacity continues to tighten throughout the United States, which it should continue to do up until the end of this week, and then slowly come back online depending on what we see after July the 4th, of course, in terms of volume, which traditionally we do see a little bit of retraction there as things cool off a lot in July. End of quarter, start of new quarter typically tends to be that way. But again, not everything is as it quite appears this time in 2020. Looking at the map, you can see there's still a lot of green in the outbound tender volumes. Anything on the lighter shade of green, pay attention to those. If you're a carrier operating in those areas, we should see pretty significant volume increases. So again, you're seeing increasing volumes across the border there down around Texas and Mexico. Los Angeles, California, outbound tender volume index really blowing up. We see those volumes were higher than they were in March. Again, this is, due to the fact we have a lot of long-haul freight coming out of this portion of the country right now. Tender rejection rates skyrocketing for both van and reefer rejections right now. Reefer rejection rates up around 36%, van around 17% right now for the Los Angeles market. So capacity extremely tight, and it continues to be. And like I said, a lot of this market is driven by long-haul freight volumes, and they're the largest representative force in the outbound tender volume index for the market right now at 180. You've got mid-haul and city both growing as well, but all lengths of haul just about are growing right now in this market. So again, anybody operating on the West Coast right now really needs to keep paying attention to the West Coast. Figure out a way to get back if you can, because you're going to have a lot of long-haul freight opportunities. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everybody. It's Luke Falasca bringing you another broker update. And happy first day of July. We're only a couple days away from the 4th, so a big holiday coming up here in the transportation space. But for right now, let's enjoy the first day. Tender volumes and rejections continue to rise. No surprise there. They've been rising pretty much steadily since late April. A couple of dips in there due to Memorial Day and a few other things, but for the most part, a fairly steady rise. This orange line here is that tender volume. Now look at this real quick. If you remember, notice the blue line here. You can see this spike that we had in March, that tender volume. That was that panic buying surge. We're nearly there. We may eclipse it, we'll see, but we're essentially where volume levels are nearly at their all-time highs since we started measuring at the beginning of 2018. And that orange line there, those are the tender rejections. Not quite as high, but still extremely high, sitting at a little over 15%. We're 15.34% right now, which is incredibly high at a national level. Largely driven by dry van freight. Reefers are up there as well. Flatbed rejections still extremely low. Now, we're going to look right here. We're going to look at something a little bit different. There's a lot of colorful lines here on the screen, so let me tell you what you're looking at. A lot of the tender rejection rise is driven quite heavily by the 10 largest markets in the United States. With that, number one, notice this blue line here, that blue mountain in the background, which is sitting all the way at the top at 18.57%. That is the Atlanta market. Atlanta is the largest market in terms of outbound volume in the United States. It's bigger than Ontario, LA, Chicago, Dallas, Harrisburg. It's bigger than all of them, and it has the highest rejection rate. But if you notice that blue mountain, it's really started to skyrocket here over the last 10 days and has surged above Ontario, above LA, which you see here. LA is in green there, a little bit below. That next line there in yellow is Dallas, right? So it has really started to surge above and is now the tightest market of the top 10 in terms of tender rejection. So not only is it the largest market by volume, has the highest tender rejection. So if you're moving any freight out of the 10 largest markets in the United States, you can pretty much go into it knowing that spot market rates are still rising. Shippers are having a harder time covering capacity. There are fantastic markets to attack in terms of trying to land new freight. Shippers are having a hard time covering their loads, particularly at their contracted rates. They're having to rely on the spot market, and they need that capacity. Call customers in these markets. You're looking at Harrisburg, LA, Ontario, Dallas, Elizabeth, New Jersey, so on and so forth. There's a lot of good markets here to focus on, so keep that in mind. And then just to get a little forward view here, I know it's really exciting to see this massive volume surge here. Look at this in blue here, right? That's where we are. The last 2 years you have in green is 2018 volume levels, and in orange you have 2019 volume levels. So you can see how far above we are there. But what I want you to look is that forward view. Notice that orange and green line as that extends out through the rest of the year, that forward-looking view. Notice the seasonal pattern here. After the 4th of July dip, which will happen right here in a couple of days, we tend to fall into this seasonal pattern where volume levels start to get a little bit softer. Not super significant. There's a little bit of a bump right as we go into Labor Day, and then they really soften out. We'll keep an eye on this. I would expect volume levels to start to fall very quickly after the 4th of July. Time will tell, but keep an eye on that. Very quickly, this is where our eyes are going to be. We're going to see how far we dip during 4th of July and how much we recover after that. So keep an eye on that. We'll keep you posted. Time will tell, of course. Rejection levels will definitely be impacted by this. They may continue to rise a little bit, but we would expect a little bit of softening after the 4th of July. Of course, time will tell. We'll be able to tell in a few days, and have a fantastic day.
Welcome to your rail intermodal update. I'm here with Mike Baudendistel, our rail intermodal market expert. Mike, what do you have for us today?
So today, the rail traffic just came out, and for the release on the rail carload side of the business, so setting aside intermodal units for a minute, they actually looked very similar to the previous week. So they've sort of, this recovery that we've seen, I have rail carloads here on the board in blue 2020. You see, okay, it's off its low in sort of early June, but in the last week, it just sort of has flattened out at a low level, still down about 22% year over year. So still lots of weakness in the industrial sides of the economy. Some of the parts that haven't really shown any improvement are things like metals, petroleum, coal is not really a cyclical, but that's still down 35 to 40%. Motor vehicle improvement is starting to stall out a little bit, so still well below, year ago levels. So you're seeing weakness in the industrial side of the economy. As we turn to intermodal units, which is what I have here, a different story. In blue, we have domestic loaded intermodal units. In orange, international loaded intermodal units. And I've talked about before, domestic has really outperformed international intermodal, in recent weeks. And we have this all the way through the end of June, and that's continued, through the end of June with domestic intermodal improving. But international starting to be off its bottom as well. And it was actually for the first time, lately have started to see some improvement there too, going from, less than 10,000 containers a day up to almost 11,000 containers a day. So that's been a result of some of the improvement in imports, and it would about 60% of all intermodal, if you combine domestic and international, is imports. So starting to see some improvement on the international side as well. Here we have intermodal rates. These are intermodal spot rates for the domestic side of the business, and you just see how lately it's really sort of shot up after being down in the $1.35 range, now all the way up to $1.55. Not unusual for that to happen right at the end of the second quarter. We did see that last year, but think that's positive for carriers. Now here, turning attention to one key lane, this is LA to Dallas, and showing intermodal rates in blue from LA to Dallas, and highway rates in green from LA to Dallas. You do see the truck rates closer to you bring up the rates for intermodal. Now they're trading, pretty close to the same level, 225. So it looks like the improvement in the highway, business has, contributed to intermodal improvement, as sort of seeking out alternatives as those rates rise.
Excellent. And Mike, real quick, one of the things that you mentioned was that weakness in the industrial sector. We just got the ISM numbers out for the Purchasing Managers Index showing that there was some improvement. Do you expect this to have any impact on the rail intermodal market?
Intermodal, I would say less so, but I think on the rail carload business, you should start to see it there at some point. I mean, the last week really didn't see it, but I think it's the direction there should rise. I do think there is some excess inventory in the system that needs to be worked down, and I think that's why it's down more than 20% on the rail carload side of the business.
Excellent, Mike. Thank you so much. Insightful as always. We appreciate it. And thank you so much for tuning in. That's going to do for this segment of FreightWaves Now. The content doesn't stop here. We're always streaming around the clock, so check out our TV app and all your favorite streaming platforms, including Apple TV. And if you're looking for a little bit more content, the great Zechs Trippin and myself will be hosting Freightonomics soon, later on this afternoon, so be sure to check that out. Thank you so much for tuning in, and we'll see you on the next episode.